Good morning. From the Elevate Network team, welcome everyone to Mobilize Women 2025. I'm Anusha Hart Paoletti, the CEO of Elevate, and I couldn't be more delighted to be with all of you today at our summit. For anyone new to Elevate, let me share a bit about what we do. Elevate Network is the largest community of women at work established over 28 years ago. And for these nearly 3 decades, our vision has been and is to make work for all. We have 31 chapters globally. I see on the chat, we have folks from all over the globe on this summit, and chat is very active. I love to see comments coming in. Please keep it up. But we have these 31 chapters globally, and I want to acknowledge the true foundation of our community, our chapter members, our chapter leaders, for whom this is a labor of love, our corporate partners, many of whom have made this possible today, and our squad participants. You'll hear a lot more about squads through the day. But these are the folks, these are the people, these are our partners that make this network happen. And without your commitment and your effort, we wouldn't be able to have this amazing day ahead. So thank you again. This year's theme is legacy in action. And when we were thinking about it, we really wanted to think hard about legacy itself. And it tends to be something that we really focus on at the latter stages of our personal and professional life. And we wanted to enthusiastically shift that conversation to something we can talk about today, hence the legacy in action. Today, you will see us cover a range of pertinent subjects. We'll talk about AI, the wealth gap, health, women's rights, and rooted firmly in the present. It's June 2025. Happy Pride Month. It is June 2025. So our conversations are going to be rooted at this moment. And we want to talk about what our community has shared is top of mind. And you'll see that through the course of the day. We couldn't make this possible without the support of our sponsors. So our gold sponsor, Alliant, has made this possible. We have Diageo, Palisade Capital Management, and the Geese College of Business. And I really want to thank everyone from these firms that have supported us. Let's talk about today and the day ahead. It's what I'm really excited about. Our first panel is Closing the Investing Gap, and it's empowering women to build wealth. Through the day, we'll talk about AI and power. We'll talk about women's health, the current state and future trends. We will have an Elevate town hall, so we'll talk some more. And we'll talk about women's rights, what's top of mind. We're also joined by two tremendous authors, Morgan Devon and Shannon Watts. So without further delay, I want to invite our first panel to the stage so we can really get into these conversations. This panel is sponsored by Palisade Capital Management. And I couldn't be more excited than inviting our New York chapter member, Hattie Mendes, to the stage, our very own Hattie. She is the founder and CEO of Boldly Speaking. I'm going to moderate this panel. Welcome, Hattie. For our panelists, we're joined by the longtime supporter of Elevate's mission, Jackie Zahner, founder of She Money. Hi, Jackie. We're joined by Allison Berman, the CEO of Palisade Capital Management. And we will be joined by Samina Burke, the partner of W Health. So without further delay, Hattie, I know you have tremendous topics to engage with our panel with. So I want to turn it over to you. And let's get this underway. Take it over.
Okay, great. Thank you, Anusha, and hello to everyone. I'm really excited to be moderating this important conversation on closing the investing gap and empowering women to build wealth. So to get us started, I would like to begin with a lightning round of questions for each of the panelists. So I think we're going to start real simple. And Allison, I want to start with you, and then Jackie will go to you next, and we'll just go around. So first question for the panel is, what is a one news resource, or what's one news source that you either read, hear, or watch regularly? Allison, you want to go first? Oh, I think we're going to move on to Jackie and we'll come back to Allison. Jackie, would you like to get us started? Jackie, can you hear what I guess can anyone hear me?
I
Because
can hear you, so maybe I can get started while Jackie gets her mic. Can you hear me okay, Haiti?
yes, I can hear you
Okay,
fine,
perfect.
Samina. Go ahead.
For news source, I love reading Term Sheet. It's by Fortune Media, and I read it every morning for news on the latest private deals and announcements for P firms and VC firms that have raised funds.
Amazing. That's really good to know. I've never heard of them. Could you repeat the name of the publication?
It's called Term Sheet.
Okay, term sheet. All right, good. I hope everyone's taking notes because I think it's really important for us, to take notes and make sure that we're learning, we're using this as an opportunity to learn. So, Jackie, do you want to take us next? You want to answer next? Okay, I think she's having an audio-visual problem. So we're going to move on to the next question. Samina, it looks like you and I might be talking to each other for a little bit.
I love it. I can keep going. So
All right,
we're good.
and Jackie, just let us know. We'll hear from Jackie. As we'll move on to Jackie as soon as we hear from her. So the next question I have for you, and let's let you have a choice in this question. It's who is a person that has significantly changed how you think about money? So that's one question you can answer, or you can tell us about a female investor that you most admire. So which you can choose
I would
someone
love to
who's
talk. I would love
yeah,
to
go
talk
ahead.
about a female investor who I really admire, and it's Stephanie Gaveta. She's the founder and managing partner of Coalesce Capital. And Steph is really special. She brings 2 decades of private equity investing experience. And after working at some really storied investment firms, she actually started her own debut investment fund and raised an oversubscribed fund. So she had targeted $750 million, but ended up raising $1 billion for her debut fund. And this is during a time where most P firms have been struggling to fundraise and have actually
Wow.
reduced their fund size. So I really look up to Stephanie and see her as a trailblazer in the space.
That is amazing. I've never heard of her, but I'm going to start to follow her now. Jackie, any chance you're with us now? Not yet. Okay. We're going to move on to the last question in the lightning round, although we might have more lightning round questions
We're
depending on
giving
who.
them a lot of time to think.
Yeah. All right. So this next question is around like, are you a morning person or are you a night person? Because I'm definitely a morning person, and I know my answer to this question for sure. But I'm kind of curious to hear your answer. So, if someone's going to call you with a critical work call is coming through, would you rather it come through at 4:30 in the morning, or would you rather it come through at midnight?
Oh, goodness. If I had to choose between those two, I think I would say 4:30. And on a personal note, we adopted a mini long-haired dachshund into our family a few weeks ago. And so because of this dachshund, I'm typically up early around 5 a.m. But generally, I prefer work calls in the mornings because I'm curious how you feel, but mine just feels more fresh and I can do my deeper thinking in the morning.
1,000%. I'm also a morning person, so I'm glad I have at least one person on this panel that I can call if the market is tanking and I have a question, I know who to call. But yeah, I'm also a morning person. I feel more fresh at that time. I have more clarity in that moment. I'm less tired. Yeah, I go for walks in the morning, so like my mind is very clear, and I feel like yeah, that's definitely the best time to do my best thinking.
And the rest of the
Um,
world is still asleep. So I find it to be really quiet and peaceful, to your point.
Yeah, 1,000%. So I guess we're still waiting on Allison. We still are. Jackie, any change on your end? No, we can't hear you yet, Jackie. All right, so no change from Jackie. I think I guess we'll start the conversation between us two, Samina. We'll kind of get the conversation going, and then hopefully we'll have the other two panelists join us in progress. So I'm going to ask you a question about a topic that I know very little about and that I suspect the people in our audience know very little about. So you kind of have to keep it very simple for us. Maybe, just kind of dummy it down a little bit so that we can really follow along. But the question is, private equity as an asset class is starting to gain a lot of momentum. And hi, Anusha.
Can you show with the delay?
It's going.
Okay. So
Jackie,
so
I have Jackie on audio. So if you want to ask Jackie the question, I think we might be able to make this work. So if you want to pose the question, Jackie, you want to say hello, Jackie?
Hi.
Perfect. We hear you.
Okay, great. All right. So Samina, we're going to come back to your private equity as an asset class question in a minute, but we're going to come back to Jackie now. So Jackie, now that we have you, I'm going to ask you if you can talk a little bit about maybe what is a news source that you read, hear, or watch regularly. We already heard about Term Sheet from Samina. Do you have any different sources that you might want to share with us?
Good morning, everyone. Sorry again for this technical difficulty. It's such an honor to be with you. For the lightning round questions. So many sources. I wake up to Bloomberg every morning. I think that's problematic, though. I'm not trying to advise that for everyone's mental health. Bloomberg is what I listen to every morning. Yahoo Finance on TV. And I'm kind of a news junkie, especially with respect to business and investing news.
Okay, good. I like that. Bloomberg is I guess a tried and true source. So thank you for sharing that. And I wanted to ask you, I asked this question of Samina, and I'd love to hear your answer. And you have a choice. You can tell us about a person who significantly changed how you think about money, which I think is a really fun question. Or you can tell us about a female investor that you most admire. Either one is okay for this question.
I actually think there's a man that I met a long time ago, and I think about just how I think about money. His name is Ashwin Chabra, and he wrote, this is such a kind of eclectic investing book around rethinking. It's called, I think, it's goals-based investing, but he's someone who does asset allocation, and it just invites you to think differently about your money in terms of around your goals rather than more traditional like risk return framework. So it's something that sat with me from a very early age to really think about. And I don't know if you said a woman, so I apologize if I gave you a man as an answer.
No, it was a person, so you did good.
Yeah, just someone who just invited me to really think differently about how I align my money and especially investing around my goals.
Yeah, I really appreciate that. I think focusing on money goals is really important, and I want to hear more about that later. So thank you for sharing that. And then the other question I asked Samina, so you can give us your answer. Turns out Samina and I are both morning people, but would you rather get a critical work call at 4:30 a.m. or would you rather get it at midnight? What's your preference, Jackie?
I tend to be morning. Actually, I'm an early riser. I'm up at 5:30, so I'm definitely a morning person.
Okay, good. So we're all morning people. That means we know who we can call when the stuff hits the fan and we need some advice. We know that we're all going to be up watching Bloomberg and checking out Term Sheet to start our morning. All right, so I'm gonna keep us moving. Hopefully, Allison is going to join us shortly. But Jackie, I kind of want to start the conversation with you as it relates to how you have long championed the idea that money is power, and I couldn't agree more. My business is completely centered on empowering underestimated people. So I like really I'm aligned with this notion that money is power. And I know that through She Money, you're inviting women to step into their full financial agency all the time. That's your mission. So what shifts do you believe are critical for women to feel a sense of ownership over their financial future?
Thank you. I mean, so many. I think there's ones that are certainly internal to the individual as well as more systemic in the broader environment. I think first and foremost is this idea that's recognizing this become our tagline: how much money matters. How much money matters to your overall wellness, for your ability to reach the goals that you want to achieve, provide for your family, and have financial freedom. And I don't think that's a message that's really delivered to women, certainly at a young age, maybe more so now. It's actually interesting. I'm in New York at a space, and I'm so apologetic for these technical difficulties, where they opened the Francine Lafrac Center for Financial Wellness at Barnard College. And what's so fascinating about that, they integrated emotional, physical, and financial wellness all into one center. And they're going to be delivering it to these students at Barnard College, of course, a women's college. And this is 2025. Imagine if we would have had access to that when we were younger.
Yeah.
Most of us don't learn about money when we're young. And so we have to pick it up along the way. And the messages that come, the socialized messages around money, especially towards women, even now are very mixed. So first and foremost, how much money matters. The second, and it's connected, is just pay attention to the money messages that you're getting. That's a shift that has to happen within us to say, wealth matters. It's okay to want to have money and be aspirational and negotiate and spend our money with intention. And that's something that's, a shift that I think has to happen within each one of us. And related to that is this idea of getting money motivated. For whatever reason, as a young kid growing up in a small town in British Columbia, I really was very money motivated. And I think about that now. I just turned 60 this year, and even the work I do now, around She Money, is how much it matters to set those intentions and be aspirational in terms of your goals. Mm-hmm. And I think the last one really quickly is just recognize systemic barriers that are there for women in achieving financial agency and wellness. We got to name it, we got to claim it, and we got to try to change it.
Yeah, amen. Plus one to all of that. You made me think of a lot of things when you were talking, Jackie. I love this notion of money motivated. That is something that I think can be a little bit countercultural for some cultures. Like, there's a little bit of like judgment around that for some people. And it's like, that's not like a thing to do. So I kind of think I really like that. And I think that can be quite empowering for people to hear. You made me think about like when I've been thinking about like my future, and I do a simple Google search and say, how much money should I have saved by the time I'm 50? And like the answers that are there, per the internet, and compared to what I have, and like how powerless that I felt in those moments where I'm looking at what I should have and what I actually have. And when there's an opportunity to really feel empowered by what you already have, and then learning strategies for how to build and not like get too disappointed or too sad or too discouraged along the way. So I'm sure, you deal with a lot of people who are in those circumstances in the work that you do. Yeah. Well, thanks for that. I already feel like we're well on our way with this notion of being money motivated. Samina, I'd love to turn things over to you now a little bit. And again, so we're going to talk about something that I think a lot of people are less familiar with, and it's this notion of private equity as an asset class. So we really are going to like learn from the basics, and hopefully, kind of some strategies and, why this is important. But yeah, I'm really curious to know why women should know about private equity and why this asset class is particularly relevant right now in this moment.
Great. Thank you so much. Really appreciate being here to talk about this topic. And maybe just for some context, I started my career investing about $40 billion into private equity and venture capital funds. And I did this on behalf of some successful executives in Silicon Valley. And then for the last 8 years, I've had the honor of working at some top quartile PE funds investing in companies. So hopefully with having kind of these two vantage points, we can come to an answer on some of those questions that you asked. So we often talk about women investing from a place of being behind male peers, but private equity is different. It's a new asset class that's now just becoming accessible to retail investors like you and me. And I think that gives women an exciting chance to enter on equal footing. So with the limited time that we have, there are really 3 topics I wanted to talk about. One, as you said, what is private equity in the very basic terms? Just understanding why it's being accessible right now, because I think that's an important piece of the puzzle. And then third, if you decide it's the right asset class for you, what you should look out for in terms of investing. So what is PE? The most basic way I can think about it is it's a sub-asset class of equity. So in equity, you have your public equity, which is just the stock market, and then you have private equity. And unlike public equity, in private equity, you can't buy and sell in and out of it on an exchange. Instead, you're really investing usually through a fund, and your capital is locked up for years. So I'm going to focus this conversation on private equity funds that are buyout in nature. And so for buyout P, you're buying a private company in full and then working over 5 to 7 years to increase the value. Now, how are we doing this? We'll typically improve operations. Maybe we'll look at pricing. Maybe we'll launch new products, expand into new geographies. We'll often change leadership teams as the company scales and has different needs. And when we talk about buyout, we typically use leverage, also known as debt, to buy that company in a capital efficient way. So all these things allow the company to accrue in value. Eventually, we'll sell the business, ideally at a profit, to another fund. Maybe we'll take the company public through an IPO. Maybe we'll sell it to a strategic buyer, and that buyer can either be private or public. But investors, including us, share in the profits. So in exchange for that access, you'll pay fees. And so this might be the 2 and 20 structure you may have heard of, and it's what incentivizes private equity firms to deliver strong returns. So there's usually an annual management fee somewhere between 1% and 2%, and then a performance fee, usually 20% of profits. So private equity sounds great and interesting so far. So let's talk about why now. Private equity has historically been for institutions. So I mentioned I started my career in the family office space. So we were looking at private equity. So our pensions, college endowments, really big institutions that have big balance sheets. But that's really changing. In the past decade, capital has been harder to raise from traditional sources. I started off this conversation talking about Coalesce Capital that was able to fundraise in this challenging backdrop. So a lot of these PE firms are turning to individuals like us as a new channel. Retail investors are projected to allocate $1 trillion to private markets by 2025, according to Bain & Company. So it is something that we should keep in mind. It's a seismic shift that is on the way. At the same time, there's a lot of technology and regulation that are making it easier to offer these funds in smaller retail size slices. And so you might have heard, and I see folks nodding their heads, you might see names like Blackstone and KKR creating products that are specifically created for individual investors. So this is all an exciting shift to me. And the way I see it is, over the last 20 years, private equity on average has outperformed public markets. And if you look at the public market equivalent, or PME, you'll see a positive spread, and especially with top quartile funds. So if you invest in the public market, you'd be generating a strong return. But with private equity, you've seen, especially for the top quartile funds, you're getting more for each dollar. So maybe let's talk about why that is. Globally, there are 140,000 private companies with annual revenues of over $100 million versus just 19,000 public companies with the same revenues. So you have a bigger pool of potential companies to go after. It's like a target-rich environment. And we've also seen just the value creation shifting from the time that a company was private, especially now that companies are being held private for longer. So just to give some household names, Google and Meta are good examples. While they were private, Google generated 1,600 times its return, while when it was public, it was a 45x return. Still good, but just think about that magnitude difference.
Wow.
For Meta, it returned over 9,000 times its capital while private, well, just 4 times when it's become public. So super interesting, but I like to think with a critical eye, and not all PE funds outperform. Some under-deliver, and some even lose money. So just getting this access alone isn't enough, and I'd love to talk about how we should choose wisely. So what are kind of the 3 things we should look for? One is fund strategy. So PE isn't one size fits all. Within buyout funds, you can employ a few different strategies to actually increase that value. And I'll share 2 examples from funds I've worked. At Alpine, we buy founder-owned businesses that are in lower middle market, where we can buy at attractive valuations. And core to the strategy is dropping in our own talent into the C-suite to execute our playbook, which includes growing the businesses through M&A. And then just as one other example, at American Securities, we focused on mid-sized industrials companies where we believe the company was already in the number 1 or number 2 position, but we could just increase it incrementally. So we would have an in-house resources group to work on functional areas like pricing, procurement, financial systems. And interestingly, because it was so core to our strategy, the resources group was actually bigger than the investment team. Now, the second thing to look out for is net returns. And I want to say like 3 more times, net returns, net returns, net returns. Make sure you understand the performance after all the fees. A fund might tell you about its 20% rate of return, but that could actually be before you're paying all of the management fees and carried interest. And also understand that as a retail investor, you might be charged additional layers. So check the fine print and make sure you're looking at net returns.
Amazing. Samina, thank you so much. I feel like I want to welcome Allison to our conversation. Allison, welcome. Jackie, do you think you have sound with us now?
Can you hear me now?
Yes. All right. It's all here.
All right. It's okay. Have to go too long.
Oh gosh. I had a heart attack. So I am so sorry. I don't know. I just apologize. I'm so happy to be here now.
Well, we're happy to have you. Allison, Samina, thank you for all that information. I think, we got a really good overview on what we can expect from that asset class. And I think it's super interesting. So thank you. And Allison, I want to bring you into the conversation now. And you are the CEO of Palisade Capital Management, and you're operating at the highest level of wealth management. So I'm curious to hear your unique perspective on how women should approach financial legacy.
Absolutely. And first, thank you to the Elevate team and my in-house IT team. My apologies to the audience. We did test everything out beforehand, and a few last minute issues here, but thank you everybody to get me on this call. I'm so happy to be here and joining. And this idea of financial legacy, when I hear the term financial legacy, I think of billionaires and philanthropists, Peggy Guggenheim, Melinda Gates, real people of names on buildings. But in my experience, financial legacy, it's not about how much wealth you have. It's about how you relate to money, what values and habits you pass on to those that come after you. So in that sense, we all have a financial legacy. Working as a financial advisor with women at all stages of their career, from those just starting out to individuals who have built and are stewarding real generational wealth, I've seen how deeply our relationship with money is actually shaped by the way that we grew up. For some have a very strong sense of scarcity or shame around money, and a tradition of silence around it.
Yep.
Others are at the total opposite end of the spectrum, where money is about extravagance and an overconfidence. Yep. But regardless of what background you bring, there's one truth I've come to see, and that your relationship with money is really your financial legacy, no matter where you come from. So a big part of the work we do at Palisade is, especially working with women, I think this is so important, is to really take time to pause and reflect. What messages did you receive about money? When topics of money come up, are you anxious? Are you confident? Are you completely avoidant, which is a category I find myself, falls into at times. And once we understand the innate relationship that you have that's been passed on to you, at that point, we can start reframing things and trying to create a healthier, intentional relationship with money, because that's what gets passed down as legacy. It's not just assets, it's attitudes and mindsets. And it sounds a little bit abstract, so maybe if I would
got a little more concrete, it would be helpful. So when we think about legacy and we start with women who are early in their career, and frankly, anyone who's early in their career, we always start with education. The more we understand, the more we're empowered to make thoughtful and resilient decisions. We all know that societal norms have kind of put women outside of financial decision making, and the only way to change that narrative is for all of us to educate ourselves. It all starts there. As you move into your career, really burning it at both ends. And we've, seen folks, whether, balancing family, career, parents, when your plate is full, that's really when we try to think about, what do you value most? What is important to you? Is it education? Is it the arts? Is it your community? Which community that you're a part of? Is it building stability for your family? What is important to you? It's not about what you invest in or how you invest. We can take care of that part for you, but it's really about what you model. What kinds of conversations are you having at your dinner table? What kinds of conversations are you having when you're out with friends? How do you frame success? What does that look like? How do you speak about it? What does risk mean to you? What does generosity look like in your family, in your community? So, that's where we really try to get into, the purpose. And then for women who, are at the ends of their careers, who are now, hopefully, have built enough that they get to relax, enjoy life a little bit more. That's when we really start getting into questions of, what lasting impact do you want to have? A lot of times also we talk about impact, how you use your money. You have to think about unintended consequences. What could be the unintended consequences of some things you may want to do? Planning at that stage is deeply personal. It's not just about transferring wealth. It's about, how do you transfer the wisdom that you have and your mindset? So I think ultimately, from my perspective, what I've learned from clients is financial legacy. It's not just a number. It's not just your assets, whether you have $10 million or $10 million. It's about the knowledge you have, your values, your mindset, your behavior, and how you interact with those around you with respect to money.
Yeah, I haven't always encountered financial professionals like you, Allison. I really appreciate the care and the intentionality with which you approach it. Like I feel like it's very kind to your clients to look at it that way. So thank you for that.
Thank you.
Yeah. So I'm gonna kind of move us all into something that maybe I think the crowd is ready to hear more about, and that is our current economic environment. We can't talk about money and markets and investments and feeling empowered without talking about what's happening right now, especially as it relates to the broader economy and the volatility that we see. So I'm curious to know from the group, what are you watching closely? And more importantly, are you playing offense, defense, or both? And I'm sure like you have to be watching the market like a hawk right now. So Jackie, I'd love to start with you, and then Samina, go to you, and then Allison, we'll end off with you. But again, like tell us what you're watching and how you're playing the game.
Well, thank you. And as a good Canadian girl, I'm going to use a hockey analogy. Go Edmonton Oilers. Elbows up, people. Elbows up. It's always offense and defense, I think, for me. But there are times where you can just like sit on the sidelines too. And I think there's this common, wisdom in when it comes to the markets is buy and hold, right? Especially from an investment perspective, take the long game, especially with equities, and think about staggering in. I think what's different now, and I'm a bond trader, so I started most of my career, in the 90s trading mortgage-backed bonds at Goldman Sachs, and that meant I had to pay attention every single day to economic indicators and think about how they impact the bond market. And I think that's what's not new, like it hasn't been an issue before, but is it very much something to watch. And if you are a Bloomberg watcher like I am, you will see how much attention the bond market is getting right now, because and the U.S. Treasuries, in fact, were downgraded, I think, for the first time in history not that long ago. So the bond market matters a lot, and it's not often talked about because it's usually just not doesn't matter as much. But what's happening now with conversations about the deficit, the ability of US government to repay its debt, the percentage of GDP that is having to go to servicing debt, interest rates matter a lot. And I think that obviously has implications throughout the credit markets. When you think about how it affects the individual, whether it's paying student debt or mortgage debt, your ability to move very much dependent on maybe where you had that initial loan, if you have to sell and refinance at a higher level. So I think very much the eyes are on the bond markets. And what that means, of course, we're seeing now is as rates rise, especially as the long-term treasuries rise, that's increasing cost, a negative effect on the deficit. And because of these trade tariff wars and things that are going on, and so much of our debt is being held outside the country by foreign entities, there's this idea that, well, if you want US denominated assets, you kind of want a good relationship or want to be thinking that the place that you hold those assets in is a good place to invest. So I think there is a lot going on, how it translates into how a person like me or you or impact and think about our investment portfolios perhaps is a bigger conversation. But I think I think that's where a lot of tension is right now, and it does have implications because U.S. Treasury yields are at the foundation of all rates on borrowing, as mentioned before. So I think it's an interesting time, highly politically charged time, and that has implications on the markets overall and this idea of U.S. exceptionalism.
Thank you, Jackie. Samina, how about you? What are you up to, and how are you navigating these waters, these uncertain waters?
With private equity, we're focused on the long term and we have the benefit of long term holds. A fund life can be as long as 10 years or even 14 years in some recent iterations. So we have that benefit as we look to the macro variables. I'm watching interest rates like Jackie because that is a way that we finance some of these deals, and we can refinance every few years, but it does change the math. And I'm also thinking about underlying demand drivers for the companies that we're investing in. To your question of am I playing offense or defense, I would say net, we're playing offense because times of turbulence are often times that other investors are a little bit more afraid of kind of going into the game. And so there's less competition. But we are being really disciplined to sticking to our knittings of our strategy. So focusing on quality over quantity, and then also really just double downing on businesses with durable cash flows and resilient teams.
Thank you for sharing that. And Allison, what advice would you give to your clients? I know there was a moment in time, there was a week where I just saw all my money going away. And but everyone was just like, just sit tight, like it's going to come back. So tell us, what advice do you give your clients?
I think that's a large piece of what's been underlying our advice lately is to remain calm. I think what we've seen is that the current administration has a bit of an unorthodox communication and negotiation style. So when all this news about the tariffs first broke, the markets went into a tailspin. People started freaking out. You look at your accounts, this huge dip. We've recovered from that as the picture has come into greater focus. So I think, we're going to have more short-term volatility until the policies become clear. And that's going to take a longer time to play out than we've seen with prior administrations, a lot due to the communication style, kind of the sledgehammer coming out instead of using the scalpel. We'll get to the scalpel, and that will have, implications, but you have to take a long-term view. It's a great opportunity for if you're really, in the markets, you can find some names. There's good value out there. You have to be a little offensive, a little defensive. And for individual clients, we actually are taking this time to really push people to think about their risk tolerance, right? When you do have a market dip like that, that's the true test. It's one thing to have the conversation. Okay, if the markets were down 10%, if they were down 20%, how would you feel about this? How would you feel about that? What does that mean? How would we reposition you? Okay, versus it actually happening and feeling those emotions and understanding, okay, if your portfolio was down, would we need to make other changes in your lifestyle, in your financial plan? Do you have the stomach for that? So this to us is really a time to revisit questions about risk tolerance, time horizon, to make sure we have the right allocations, the right asset classes, and individual portfolios to get through, the current market volatility. But overall, look, we have a positive outlook over the longer term.
Mm-hmm. Amazing. Great. Yep. And my portfolio is looking good again for now. So, yep, I'm glad I stayed exactly where I was. Um, I want to shift gears a little bit and just talk again, like more at a I guess a macro level. And Samina, I want to start with you this time. How can we begin to normalize conversations, not only about money, but about risk and about wealth in ways that really empower women at every stage of their financial and personal journeys? So, how do we do that? How do we normalize it?
Well, I think the fact that we are having this conversation is so exciting, and we just really need to normalize conversations like these, unabashedly finding ways where women can grow their wealth. And like Allison and Jackie said, I've found that women are more confident investors when they connect money to purpose. When
Mm,
we think about like the wealthier we are as women, the more we can start investing in companies that reflect our values, fund
mm,
campaigns and medical research, and also just make life decisions that work for us. So when we see capital as a tool to express values and not just a number, I think it really just invites deeper and braver conversations. So I'm hopeful that the audience takes away the idea of kind of having a conversation like this amongst their girlfriends.
yeah, thanks for that. That's amazing. I really like that. Allison, how about you? How do you think we normalize these conversations more and more?
Yeah, I just want to piggyback on what Samina said. I think you made some great points. When it's connected to purpose, you're more connected and personally invested. Like I said, most of us can be very avoidant about these things, but when it's something you're passionate about, all of a sudden you're talking about money, but you don't even necessarily realize it. And look, we normalize the conversations by having them. You have to have them. I'll never forget when I got my first job and they gave me the 401k paperwork. And I'm embarrassed to admit, because of the industry I'm in now, I had no idea what to do. No idea. I should have done it, but when I was going out with drinks with my friends afterwards, talk about it. Ask them, what are you doing? Did you contribute to your 401k? What a great way. A lot of companies match. We match for employees up to certain amounts. That is free money for retirement. Have the conversations, whether you're out for drinks with friends. If you have children, you have to speak about money. You have to speak about how you spend money. Are you
Mhm.
saving for college? If education is important, how are you saving for college? My kids are 6 years old, and I don't want to overpressure them, but I tell them, oh, I'm saving for college. We're putting money away. We work very
Mhm.
hard to be able to do this, to instill at a young age how important that is. So you have to have the conversations. You just, push yourself to speak about these things, ask questions.
Yeah, that's so important. It's so funny you mentioned about your first job in the 401k. I had a benefits administrator that said, I know nobody here knows what the 401k is, but everyone should sign up for it. And we all did because, we were like college graduates and we're like, okay. And I'm very grateful to that benefits administrator, wherever they are, for giving us that advice. Jackie, what would you add to the conversation?
Well, double down on what everyone else said. And I think to your point, we normalize it by normalizing it. And one of the reasons I started She Money and we're anchored in Utah so many years ago, is to bring women into conversation with each other around money and sort of there's a lot of content, but there isn't necessarily wrapped around money, especially for women, community and accountability. And there's this element with money, which is just in time. I mean, I know I sit and read, my stack of financial literacy books. In fact, I'm reading this book that I really appreciate right now called Financial Literacy for All. It's a relatively new book, but it talks about the author was sort of saying, financial education, or I don't really like the term literacy, but financial education is the civil rights issue of our time.
Mm,
And I was like, hell yes, in the middle of the night, 11:30, because it goes back to this idea of how much it matters. And I that is sort of the shift that we talked about earlier that needs to happen. And I think, as someone who talks about money with everyone all the time, you realize how much people want to talk about it. So
mhm,
be the one to initiate, be the one to call people together, be the one to say, I I need to negotiate for a new salary. How do I do that? What tools? And that's where I love Elevate. I love so many of and there are thousands of communities of us women coming
Yep.
together. And, we need to give ourselves, give advice and inspiration. But more than anything else, we have to create relationships where we feel safe to have these conversations and accountability about earning more, certainly around values, spend with intention, all of that. But it is okay, really okay to want to make more money. And if we help each other by doing that, by buying, supporting each other, buying it, because at the end of the day, it back to what Samina said about companies, and I'm very intentional about right now, especially supporting female-focused, female-founded companies. We grow their wealth by buying their products and services. We help each other by pushing each other to negotiate and find those better jobs. We invest in funds and build the wealth and capital of those female-forward fund managers. So I think there's no time like right now to really be intentional around it and normalize it, because people want to talk about it. They really do. At least I'm finding that. I've never had said, "Oh, don't talk about money." It's like, really, how did you get comfortable with it? Tell me about investing. Tell me more. People lean in, not lean out. And let's lean in hard around money. And especially now. There's no time like the present. There really isn't. So I'm like the big money cheerleader over here, but that's how we normalize it, by doing it.
100%. There's a question from our audience, and I would love to throw it out there and see who thinks they have a good answer. And obviously, more than one person can answer if they'd like. Um, for our attendees who are navigating life events such as a job change, maybe even a layoff, change in marital status, maybe having a baby. How do those life events affect our finances? And do you have any advice for how to navigate that?
I'm happy to jump in here as a financial advisor. Look, those are the times where you have to reassess. Where are you? First of all, do you have a financial plan? Everybody should have a financial plan, understand the amount of money they have coming in, what they're spending, what they're saving, how their investments are set up. And those life events are the time to reassess.
Yep.
Look, if you're laid off, you have less coming in. Are there ways to cut expenses? There are certain fixed expenses that are difficult to cut, but is there discretionary spending that you could cut back? What does it look like if we stop saving for a period of time? The money you were pushing aside, what impact does that have? So when those life events happen, that's when you need to reassess. And particularly in the situation of divorce, my colleague, who's our head financial planner, she herself is divorced. She has extensive experience working with divorced individuals. And that's when, frankly, a lot of women are taking charge of their finances for the first time. And that's where, if you haven't educated yourself previously, you have no choice at that point. So we actually love working with women in that position because they're so overwhelmed and intimidated. It's not that hard. The industry makes it the best kept secret is it's not that hard.
Yeah, that's right.
We use jargon, we use all these things to overcomplicate things. It's not that difficult. You have to get over the emotion and the fear and just sit down. We work with clients who have no idea even where our bank accounts are. No matter where you're starting, don't be afraid. Get organized, get all the information in one place. What's coming in? What are you spending? What are you saving? That's where we always start.
Yes, as someone who was laid off 2 years ago, I that's a +1 on that one. Jackie, did you want to add something to this conversation?
Yes, please. Yes,
Let's
I would.
go.
I'm passionate about this topic. Well, and it's people don't, unless you're kind of wackadoodle person like me, read financial literacy books for fun, right? People show up or learn about money when something catalytic happens in their life. And we tend to, and I'm dealing with a health issue with my mom right now. Same with health, right? You kind of do the maintenance. All of a sudden, your best friend or your mom, all of a sudden you're like, shit, I got to go get the, mammogram. So, it's just in time learning. And this is the fundamental thing that needs to change, right? But to the point, like whether it's divorce, we started this series, which we're calling Money Plus Death, Money Plus Divorce, Money Plus Security, Money Plus Marriage, Money Plus College, Money Plus all of these things, because that's a doorway from which most people enter, divorce being a huge one. But one also, our best read newsletter of last year or 2 years ago was Money Plus Fertility. We looked at financing fertility.
Mhm,
Talk about a huge issue. And I think my
mhm,
colleague Madison will post that in the chat. You don't think about fertility until you're thinking about fertility. And
mhm.
reality is women having children longer. A high percentage are going to probably have to and think about fertility treatments, including egg freezing. It should be a savings bucket, right? That you think about when you're 20. And part of this makes me really annoyed that women, much more so, have to do that extra level of financial thinking and planning because our lives are more complicated. We're the
Mhm.
ones, I have 2 children, that have to have children and make that decision if we're going to opt out. And if you do opt out, like sometimes still, I was walking with a friend the other day who was out of the workplace for 7 years and is thinking about wants to get back in. And she said, Jackie, she goes, I didn't think that would be true for me. I'm a salesperson. My skills are should transcend, having a motherhood break. But she's having a super hard time getting back in the market in terms of getting a job. So I think that we have to be planning, but it's that money plus thing, which is could be the catalytic event. But we should all know we should have wills and durable powers of attorney. And this is where, and I'll come back to Elevate, which is why this community is so powerful from day one when Janet Hansen told me she was creating this. I think it was at that very first event, is community. Let's
Mhm.
pair community and content with that accountability, especially around money. I have never seen it done in the way that I can imagine it happening. This is why we're doing She Money as well. And
Mhm.
this is what will be a game changer for women. If we own our financial power, hold each other accountable and make the fun. Someone said, like, let's talk about the fun factor because I'm all about that too. We have to put the fun. It can't be like you're going to the dentist. We can make money fun, and I'm here to help with that.
Oh, I'm here for that too. Making money fun. Yes. I feel like fun and accessible is the other thing that I would add to it because it can feel quite intimidating and like, but you got to deal with it. You got to take the pill and like, and Allison, to your point, like if something happens, you got to confront it and be realistic and like say, okay, like this is my current situation. So Samina, we're going to bring you into the conversation. How do we make talking about money fun, accessible, less intimidating for people?
Yes, love the idea of making money and investing fun. One kind of mindset shift I was thinking about as we were having this conversation is we often think about growing money as saving. And I come from an immigrant household. I remember clipping coupons and like double coupons, and they were like 10, 25 cents with my dad growing up. And it doesn't have to all be that. Like we can think about investing and spending to invest. And so my advice is to celebrate the small wins. And if you've allocated to in your portfolio to invest in whether it's private equity or public equity, if you're allocating your portfolio to invest, to celebrate the small wins over time with your girlfriend. So I think Sally Krawcheck, who's a mentor of mine, she'd always say, like, buy the latte. And so buy the latte, like a $5 is not going to kill you. $30 is not going to kill you along the way. Enjoy the process.
Nice. Allison, anything you want to add about making money fun, accessible, less intimidating?
Look, you gotta take a deep breath and just go into it. And I think the more you have conversations with friends, with family, it becomes part of your everyday life. It doesn't become some big scary thing. And there's so much when we talk about money, we talk about investing. There are so many things that you could have a personal connection to. It's about spending that time to find, okay, where do you personally connect? And maybe it's where your values align. Maybe it's a particular field that you're just very interested in. There's amazing stories out there, whether individual companies that have grown and the successes and their leadership stories. If you connect at that individual level, or you're just interested in industries in particular, I think everyone, once you get that baseline, you realize it's not so scary. There's something for everyone. And you just have to have those conversations, go out, have that latte, have that drink, talk about the 401k, and it can be fun, I promise.
Yeah, I agree. And I feel like the more you have a window into or like a line of sight into your money situation, that has made it, I don't know if fun is the word I would use, but certainly more empowering because you know what you're working with, and then that allows you to kind of make money moves that are going to serve you best. And I feel like that's kind of fun.
Yeah,
certainly
look, at the
certainly
end of
it's
the day,
empowering.
yeah, we all want to feel secure at the baseline, right?
Yes,
Human instinct is security. One of the number one things. Once you feel that sense, then you can really start having fun. Yeah.
exactly. Amen. All right,
Can I
well,
just add one? Can I just
oh,
add one thing?
of course.
And my mission is to put the fun into finance, and just recognizing that money is a huge source of stress. That life is, of course, getting more and more expensive, especially as women and professional women. I know a lot of those are on the call today. We are juggling a lot. You are all juggling a lot, and it's not
Mhm.
at all to diminish that pressure that is real. And so I just want to honor that as well, and
Mhm.
talking it out and speaking. I thought that, with a certain level of wealth, I wouldn't worry about money anymore. And that's just not true.
Mhm.
I think there's a lot of trauma embedded for women in money. And one thing I
Mhm.
wanted to just give a shout out to is sort of my interest and passion around the work of Chantel Chapman, who just coming out with a book in the fall called The Trauma of Money, and has an 18-week certification program that was an absolute game changer for me. So I just don't want to make light as much as I want finance to be fun. I just want to
Yep.
deeply honor and recognize that it is not a fun thing for a lot of people. And we're all shouldering a lot of pressure, a lot of stress. And that's why we need to be in this together.
Yeah, that's a great call out, Jackie. Thank you for that. As we're looking to wrap up, I'd love for each of you to share one piece of advice for the audience. And essentially, whether people are just starting out, like very early part of their journey, or they're already investing, what's one mindset or resource or action step that you'd recommend they take today? So, Allison, I'd love to start with you and then go to Jackie and then close out with Samina.
As someone who worries about money perhaps too much and is a little neurotic, I think a lot of people don't frame their decisions in terms of what the costs of those decisions are. When you go get that latte, that's a financial decision.
Mm-hmm.
Everything you do throughout your day, I'm here at the office at 10:57. I've probably made 20 financial decisions. People don't think of them that way. How
Mm-hmm.
I decided to get to work. Did I take public transportation? Did I take an Uber?
Mm-hmm.
That's a financial decision. So I push people to really start thinking about every decision and action you take. What are the potential financial implications of that? And is that worthwhile? Are you getting enough out of that investment in the Uber versus taking the subway
Mm-hmm.
that it's worthwhile?
Yep.
Sometimes it is, especially when it's raining.
Jackie, how about you? What's last tip or advice or resource you want to offer our audience today?
Well, connect with me on She Money, because obviously, write a newsletter, all that. I think if I had to boil it down to one, which is so hard, is just realize that every single day you're making financial decisions, every minute of
Mhm.
every day. To what
Mhm.
Allison said, these choices. So this idea of being intentional around it and connected with that. And this is the one thing that makes me friggin' wild. How much I talk to women about money, and they'll often start with, "I'm not good with money." And I will
Mhm.
often say to them, "What's the evidence of that? What is the
Mhm.
story this is Brene Brown, love me some Brene Brown. What is the story you are telling yourself?" I want to cry. I
Yes.
don't know when I say this. What is the story you are telling
Mhm.
yourself about the role money plays in your life? You
Yeah.
can be good at it. You can own it. It's all the things we said all day.
Yeah.
Ask what story you're telling yourself. I mean, if it's not I don't like the word empower either. I have like least favorite words. But power up around money, and do it with your gal pals, do it with each other, and be very mindful of the stories you're telling yourself.
Thank you, Jackie. Samina, close us out. Bring us
Yeah.
home.
So my sister and brother-in-law, they're both doctors, are in their mid 40s. So I'm usually going to them for advice. But I recently had the chance to turn the tables when they were approached by a friend who asked them to invest in a real estate PE fund. So my biggest piece of advice to wrap things up is to look at the terms. We were talking about how PE funds have long lockups. 10 to 14 years is not unusual. But it's really critical to match your commitment to your actual capital needs. So some new funds are experimenting with flexible structures, whether it's annual redemption windows, shorter fund lives, lower minimums. But even then, read the fine print. You want to make sure you're entering on terms that work for you.
Amen. Ladies, you have been an amazing panel. Thank you so much for the great conversation, for the insights, for the wisdom, for the resources, for all of it. And thank you to the audience for showing up today, for asking amazing questions. And I want to hand it back to Anusha now. So thanks, everybody.
I want to thank all of you because this made for a much more dynamic and interesting conversation because we had to kind of, zig and zag. But Hadi, thank you. Jackie, Allison, Samina. This was a delightful conversation. We have about like a dozen more questions we couldn't cover, but that just speaks to how engaged people were.
Amazing.
Thank you.
Thanks for having me.